When we are talking about tokenization, it is now on the front and center stage. The reason why is because tokenization is going to be everywhere in just a few months. I mean, every single big player out there is now talking about it. You know, when we think about Wall Street, they are looking at tokenization, they're embracing it. Governments are embracing tokenization. The regulators are opening the doors for tokenization. All the big banks already got the green light. So tokenization is set for just up-only growth and adoption. Now, as we do think about that, right, let's actually take a quick look at what's been happening, because players like BlackRock are telling us a few things, and if you're not listening, you're missing the big picture. Number one, let's actually start off with regulators, the SEC. Back on May 12th, the SEC held a roundtable. This is from their crypto task force. Now, they discussed tokenization, and the players that were a part of this were BlackRock, Fidelity, NASDAQ, and there were definitely more. We know Robinhood was there as well. And later in the month, towards the end of the month, we did get an announcement that on June 5th, there would be another one. This conference would be titled Emerging Trends in Asset Management, with digital assets and tokenization as part of its sessions. Again, this included panelists from BlackRock, Franklin Templeton, Fidelity. The NASDAQ was there. Robinhood was also there. Do you see the big picture here? If you don't, it's okay, because BlackRock's going to tell you here shortly. The big picture is that everything is moving on chain, and the biggest players are not missing this at all. They are a part of this. Over here, we just got a big update. HSBC Hong Kong is pushing blockchain efforts in custody, tokenization, and bond issuance. The same HSBC, by the way, that partnered up with Medico back in 2023 and is also still tapped in with Ripple Custody, which, by the way, Ripple Custody is enabling tokenization on the XRP ledger as well. I wonder who HSBC is going to use for custody and tokenization and, bond issuance. I can only imagine. They expect RWA tokenization on public chains to surge in 2 to 5 years. It's almost as if they are spelling it out for us. Hey, HSBC, the big player that already tapped into Ripple in a huge way, which, Ripple is also pushing the XRP Ledger tokenization initiative. They're expecting RWA tokenization on public chains to surge in 2 to 5 years. I wonder what they know. Then also over here, we have back in March of this year, BlackRock's Fink pumps tokenization in annual letter. Yeah, he was talking about how Wall Street and almost everything is going to move on chain and how tokenization enables so much more than anything else in the world around tech, including even AI. The world's money moves through plumbing built when trading floors still shouted orders and fax machines felt revolutionary. So now we're looking at how can we change the way that money moves? Well, we tokenize it, which is why stablecoins are being so glamorized by these big players, because once you have stablecoins on chain, that's money on chain. After that, everything else becomes extremely easy to bring on chain. The FX market's already on chain because you have fiat. All of a sudden, capital markets, stocks, everything on chain. Also, by the way, Larry Fink in April, because you got to remember, this was March. Here we have April. Tokenization of the market from stocks to bonds to real estate is coming, says BlackRock CEO Larry Fink. If we could solve one problem. Now, their problem is digital verification. Obviously, yeah, this is a big issue. I mean, hey, he's warning us what's needed, and he's going to push this. Now, if, of course, everyone has a problem with digital ID. I completely agree with it. I think that digital ID is unneeded for something like this, but they are going to push this heavy. On top of this, we have over here, BlackRock, BNY team up to tokenize shares of $150 billion Treasury Trust Fund, SEC filing shows. This was May 1st. So look at the dates here, okay? March, April, May. Then towards the end of May, or this is still in the beginning actually, Everything is lining up. Tokenization is having its breakout moment. Tokenization is gaining real traction as BlackRock, Libre, and multi-bank make billion-dollar moves, signaling the shift from theory to execution. And yeah, this is that $150 billion trust fund, right? The Treasury Trust Fund. And then we got the big announcement. On the same day, Libre announced plans to tokenize $500 million in Telegram debt through its new Telegram bond fund. The fund will be available to accredited investors and usable as collateral for on-chain borrowing. Then, the week's biggest headline came from Dubai, where multi-bank group signed a $3 billion RWA tokenization deal with the United Arab Emirates-based real estate firm MEG and blockchain infrastructure provider Maverick. When we think about what's going on here, these types of moves are becoming so common, they're not even big anymore because of how common they are becoming. But remember, this is being pushed by the biggest names out there. Now, talking about Dubai, June 8th, Dubai real estate sales hit $18 billion in May amid tokenization push. Interesting. You mean like Dubai Land Department launches pilot phase of the real estate tokenization project on the XRP ledger, by the way? By the way, when we look at this, DLD anticipates that the groundbreaking initiative will drive significant growth in the real estate tokenization sector, with its market value projected to reach 60 billion AED by 2033, representing 7% of Dubai's total real estate transactions. And this is on the XRP ledger, by the way. Here we have the announcement from Ripple at over $600 trillion. Real estate is one of the world's most valuable asset classes. Now it's on chain, starting with Dubai's title deed tokenization built on the XRP ledger. It continues to grow. It continues to become accelerated. By the way, today, the XRP ledger just continues to grow in RWA value, up 35% in the last 30 days, by the way. 157 million is just the starting point. Stablecoin market cap, by the way, up over 31% in the last 30 days as well. We could see all of the growth here. We could actually see what's been growing in the last couple, in the last month. We could also see stocks are growing significantly. RLUSD is up about in the last 7 days, 36.5%. Ondo with OUSG up 1.9 million because it was starting at 0. We also have the non-US government debt. That's also up about 1.25%. Nothing too crazy there. Then we also have more T-bills and US treasuries. But again, when we look at what's going on here, we're starting to see some pretty big step functions happening around tokenization on the XRP ledger. And we're just getting started. By the way, this tokenization of real estate is just a pilot phase. Imagine when this does go fully live. But let's actually talk a little bit about what BlackRock has been telling us. Let's actually start off with BlackRock COO says bringing traditional capital markets into the digital world will define the next decade.
What advice would you give to, sort of the rest of the financial universe that are thinking about getting into this space now?
It's a great question. I think from our lens, it's what I'm going to say is going to be very simple. Executing it is extremely hard. So I recognize that. But to us, it's very basic. You basically have a new set of exposures. Mm-hmm. The real utility in Unlock is to be able to put them in the whole portfolio. And interestingly enough, I think you could turn the telescope around also and say, ultimately, how do you put these capital markets exposures in digital wallets? And how do you go? So if you think about the bridge strategy of this alternate digital asset universe and bringing it to the capital markets, I think it's naive to assume, and this doesn't have to be in a month, but if you look out over time, it's naive to assume that you don't also have to think through how do you bring the traditional capital markets to this alternative universe. And I think both connection points will define the next decade.
I couldn't agree more. And the best example of it, by the way, was the ETFs. So we got all thrown a curveball in the last minute. There were no in-kind creates. And so we were forced to try and figure out how to make old world meet new world, right? And so hopefully in the next version thereof, we're going to have more of a synthesis of those two things. So yeah, you're spot on. I agree with that. So.
Now, on top of this, we also have over here, big shout out to Subjective Views, Robert Mitchnick, Managing Director and Head of Digital Assets at BlackRock. Institutional grade custody, exchange liquidity, and regulatory clarity are foundational to unlocking tokenization's full potential. Check this out.
Okay, and taking things further in the tokenization direction, what would you see as the main economic drivers for tokenization for BlackRock?
Well, I think that for us, it's a story primarily of access and cost for our clients. It's about being able to make more investments accessible to a larger number of investors, and to do so at a lower cost. And there's a bunch of reasons that cost efficiency can come about. I think one of the features, obviously, that you get with tokenization, in addition to those two, is the potential for liquidity. To date, we haven't seen that liquidity come to life in a real way, and we can maybe talk about that a bit later on in terms of why that is and how we solve it.
Yeah, well, I guess that's the big thing here. We've got all these catalyst projects downstairs. We've got obviously everybody in the room agrees there's a lot going on in the tokenization space, but what do you think would really need to happen for an exponential kicker here for the whole thing to take off? What needs to come together?
Yeah, I think that you could sort of boil it down to three primary things. In our view, we used to say four, but actually we think that one of the four has kind of been checked off, which is good. One is the widespread availability of custody for tokenized assets in an institutional grade way. So this space needs a number of institutional custodians, ideally both crypto native and those from the traditional space, to make it seamless to be able to participate in tokenized assets, right? Because a lot of institutions are not going to bring on necessarily a new custodian for that, first tokenized asset that they're interested in. There's just a lot of friction and overhead to implement that. So once it's fairly ubiquitous, then it becomes a lot easier. The second is exchange liquidity, right? So there's a bunch of, obviously, projects trying to solve for this, but we haven't yet seen a large incumbent, as we think it'd be valuable for a large incumbent, if there were a tokenized asset trading venue launched on the back of one of those platforms, that would potentially be a real step change in terms of how realizable that liquidity value prop is. And then third, the regulatory clarity, which I think has been talked about a lot, and there's certainly progress on that front. But ultimately, at the end of the day, it comes down to, can we get comfort that a tokenized bond is going to be effectively a bond, tokenized fund, whether that's private, ETF, et cetera, is going to be treated as a private fund, ETF, et cetera. And I think that's coming. The fourth piece, which actually there's been pretty good coalescence around lately, the space, in our view, was a little bit too fragmented to get real adoption in terms of, there's so many asset classes people were excited about, and there were 15 different things people were trying to tokenize at once, and that was counterproductive to actually coalescing around one or two or three things where we'd be able to say, here's an asset class, here's a geography where we used to do it on traditional finance rails, and now we do it in all or in majority in a tokenized way. And now there's started to be a little bit more focus there, which is helpful.
Now, when we think about this, number one, did you guys check out what he's wearing around his neck? It's a Ripple lanyard, number one. Number two, what he's describing here, right? Institutional grade custody. All right, you have Ripple custody. Exchange liquidity. You could tap into XRP, one of the most liquid assets in the space. RLUSD, by the way, also tapped in, full on liquidity, fully compliant, fully regulated. Ripple is about to get the green light from the SEC, so is XRP fully. So there you have an institutional grade custody platform that you could tap into that has liquidity, that has everything that any major bank or asset management company or anyone needs. And then you have the regulatory clarity as well alongside it. Ripple has created not only a tokenization infrastructure, but it is a next-gen infrastructure to power anything in the digital and DLT/blockchain world. This is why I focus on what's happening. This is why I truly think everyone should be paying attention when we hear BlackRock talking and telling us what's going to be happening. Chainlink just recently talked about every stock, every bond, every fund, every asset can be tokenized. This is regarding that annual letter from Larry Fink. Look at where we are at. I just want you guys to look at this image, okay? We are here at 200 plus billion. Guess what? We're not even at 200 plus billion. The total tokenized value, and I'm talking about the total, like this is the full-on value on chain. Not just around networks, everything. This is, protocols, private, networks, $24 billion. We are not even at a point where we are making up a full square on this chart. The total untokenized value, $1.64 quadrillion. We are just getting started here. And I want you guys to understand that players like BlackRock are enabling this. They are accelerating this. They are pushing this. And it's going to be networks like XRP and the XRPL that are going to be tapped in because they're already being accelerated and tapped in on multiple occasions. What's crazy about this is even if we look at the networks, right? The XRP ledger is starting to move up the list heavily. I mean, in the last 30 days, up 35%. Some of these other networks are barely up double digits. In fact, almost all of them are barely up double digits outside of, like, for example, Base. I mean, XDC is, not Base, Plume. Plume is up 141%. XDC, I think, was actually down. It's down 6% in the last 30 days. Outside of Plume, Sui, Noble. So there's 3 other players on here. So 4 in the top 26 that are being tracked here. Okay, and most of these are not even being tracked in terms of value. There is 4 that are actually up double digits. And XRP is rivaling all of them, being up almost 35%. It's actually greater than almost all of them except for Plume, which should tell you everything you need to know. Specific networks are being tapped in. They're becoming the winners. They're becoming the big, players at the big banks, the big institutional players, the, asset management companies. Those are the networks that those players are going to be tapping into and connecting to. And I want you guys to realize that we have a long way to go here. We are just getting started. That's why tokenization is going to be up only going forward. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on because I'm on free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.